talk about some of these reporting forms. I think I'll pull up the PowerPoint slides to take a look at these because we've got them in there. We'll talk mostly about the W-2. The 941, we really don't have to rehash that, but I will point out to you exactly where the information with regard to federal income taxes withheld, where that goes and how that fits into the 941. But we have already worked with that a lot in the last chapter. And then I'll just go through real briefly, talk to you a little bit about what each of these reporting forms are. These are called information returns, what they're used for. The one, like I said, for payroll purposes, the one that most payroll departments, if they even use it, a lot of times it's the accounting department that will use this one. Anyway, is this 1099 NEC. For the most part, for the rest of them, payroll departments aren't going to use them. Then we're going to look at, in the appendix to this chapter, we do have information on how to use those pre-2019, that pre-2020 method of withholding. So we're going to go through that as well, probably spend a little bit of time on that. Then I'd like to look at, there's some homework problems that you have, 1 or 2 homework problems that involve filling out a W-2 form. And I know a lot of students, I'm getting a lot of questions on these this particular question, so I wanted to take a look at that one together just to give you a little bit of a boost there. And then if we have time, we'll look at the state and local withholding. If we don't have time today, I'll talk a bit about that on Thursday. We'll start the day with that. You don't have, like I said, you don't have any homework questions on this. You don't have any exam questions on this. This is just kind of an FYI. This is how Iowa does it, okay? So let's get started. Sorry, let me see if I can't find. All right, I need to open 2 of these up. So let's talk a little bit about the W-2 form. And most of you are probably familiar with W-2s. If you've had a job before, you've probably received a W-2 at the end of the year, at least you should have. And the W-2 form is a summary form of essentially all of the everything that we've calculated so far gets summarized onto these W-2s, and employees use the information in order to file their own individual tax return. So employers have to submit them to employees by January 31st of the following year. So the calendar year, obviously January to December 31st, then that has to be prepared and submitted by December 31st. Most times employees will get them electronically these days. Sometimes they're still done on paper. That's kind of old school to do it on paper, but smaller companies may provide them on paper. Most of them, like I said, are on electronically, and many of them you can even import into, like if you're using TurboTax or the H&R Block software or something like that, a lot of them you can just import into that software and it will supposedly put everything where it's supposed to go. If a W-2 is prepared incorrectly, which happens, maybe the employer has the social security number wrong, or they had the withholding wrong, something went amiss in the preparing of it, and it's already been filed and submitted to the employee, there are corrected W-2 forms that then need to be filled out. You wouldn't fill out another W-2 form, you'd have to use a corrected W-2 form, which is what this W-2C is. So the W-2s, again, and it's easy to confuse that with the W-4. Remember, the W-4 is filled out by the employee to indicate what their withholding, their federal withholding is going to be, how that's going to be calculated. W-2, end of the year report that's submitted to employees for filing their tax returns. So each individual employee gets a copy of a W-2. One is sent to the IRS, one is sent to Social Security Administration. Depending on the state that you're in, one may be sent to the State Department of Revenue. In Iowa, they don't actually do that. At least last I knew they don't do that. But then one is given to the employee. So lots of different copies that go to different locations. And then of course the employer needs to keep a copy of that W-2. The W-3 form is a summary form of all of the W-2s. So everything on, if you've got 10 employees, they all received wages, the sum of all of those wages and all of the withholding, the Social Security withholding, federal income tax withholding, Medicare tax, state withholding, a summary of all of that then gets added into the W-3 form. Employees don't get W-3 forms. W-3 forms are to be sent along with the W-2 forms to the IRS and to Social Security and to the State Department of Revenue, and then a copy kept in the at the employers as well. So it's just a summary page of all of those. W-2 form, what they look like, and like I said, you're probably fairly familiar with these. Let's see if I can't make this a little bit bigger. And the reason I want to really kind of go through this is because you do have that, you do have a homework problem that involves these W-2s. So all the identifying information over here to the left, the payer, so the employer and their tax ID number there, the employee, so this would be specific to each employee here, employee's Social Security number, and this is just an example format. These things are not standardized. As long as the information is there, they can kind of be in whatever format. Sometimes they take it, like this one looks like it would be half a page. Some of them, if you've received them in the past, might be a fourth of a page, or they might be like a quarter of a, like in quarters, so 1, 2, 3, 4. There's no standardized formula. Believe me, tax preparers would love it if these things were standardized. They're not standardized, other than they're required to have this particular information. But when you're preparing tax returns and you're going through and you're always having to kind of find, okay, this one looks like this one looks like this, here's where the federal taxes are, here's where the Social Security is, it can be a little bit daunting. But in general, this is all the information that has to be contained on these W-2 forms. Information over here, and you'll notice that, so box 1, wages, and we'll refer to these as box wages, like box 1, box 3, box 5, wages. And when you work in it a lot, you just know what those boxes mean. So wages, tips, or other compensation, this is the amount that the employee was paid and that was subject to federal income tax withholding. So if there were any pre-tax amounts, for example, 401k payments, that amount would not be included here in these wages. It would have been subtracted out. These are the wages that are subject to federal income tax withholding. Over to the right of that, box 2 is the amount of federal income tax that was withheld. Box 3, Social Security wages. Same thing, is the amount of wages that were subject to Social Security taxes. So if there's health insurance, if the employee had health insurance withheld from their paycheck, that amount on an annual basis would not be included then in the Social Security wages box. And again, over to the right, the amount of Social Security wages that were, or amount of Social Security taxes that were withheld. Same thing for Medicare. So the amount of wages that were subject to Medicare tax, and then the Medicare tax is withheld. These 3 boxes could all be different, right? Because Social Security, remember we've got a wage base for Social Security. So if this W-2 happened to show wages that were above $160,200, well, the maximum amount that's going to show up in box 3 is that $160,200. It's never going to be more than that, at least for 2023. 2024, each year that's going to change with the wage base. But if they received $200,000 of wages, then box 1 is gonna show $200,000, while box 3 is gonna show $160,200, right? And then also, if we have amounts that are pre-tax for federal income tax purposes, but not pre-tax for Social Security or Medicare tax purposes, for example, retirement contributions that were withheld, then again, that would be another reason why those amounts would be different. So they're not always going to be the same. In this example, they are the same. There's a box for Social Security tips and allocated tips. So if this is a job where tips are involved, those amounts would be there. Dependent care benefits, if the employee had amounts withheld for those dependent care benefits, like those flex plans, that amount would be in box 10. You can see over here box 12 has several lines, and actually this could continue on to another W-2 if necessary. These are for particular types of deductions. They may be pre-tax deductions, they may be post-tax deductions, and then there's a code for the type of deduction. On the back of the W-2 is a key that tells you what that code means, okay? So, but you see A, B, C, D, there could be many more than that as well. Over here, box 13, I'm not going to talk really about 11. Box 13, if they're a statutory employee, that would be checked. Retirement plan, were they a beneficiary? Did they contribute to a retirement plan, or did the employer contribute to a retirement plan on their behalf? That would be checked. Reason for that is the amount that it impacts the amount that could be contributed to a retirement plan privately. So if they wanted to contribute additional amounts to an IRA, the fact that they have a retirement plan through work affects how much they can contribute to that retirement plan, or not how much, but whether they're eligible or not to contribute additional to an additional IRA. Other information. So this information, those who are preparing the tax return, this is important information. Like here, they've got Blue Cross Blue Shield premium of $296. Now, obviously, this is not a pre-tax health plan. Otherwise, well, maybe it is. It should be. If it's a pre-tax health plan, it should be over here, in this area over here. Pennsylvania SUI. This is state unemployment insurance. There's some states where employees have to pay a bit, a certain amount toward the unemployment insurance, and we'll talk about that in the next chapter. Then everything down here pertains to the state information. So we've got a state employer's ID number. A lot of states will just use the EIN. Sometimes they have different ones though. So the state name here, employer's state ID number, and then the state wages. And you can see this actually is different. So for the state purposes, and that's possible, 29,282.18, 29,360.18, 292. So this $78.282 was pre-tax for state purposes, but not pre-tax for federal Social Security and Medicare tax purposes for whatever reason. And then the amount of state income tax that was withheld, local income tax, or local wages, local income tax, and then the locality, and they've got Philadelphia listed here. You can see there's two lines. There could be multiple states, could be multiple localities as well if you're in a state that has local taxes. Okay. Questions about the W-2? This one anyway, that you're seeing. So this is just kind of a generic one. It doesn't even have the year listed on it, so let's see. So other types of information returns, what do we want to talk about here? The 941, of course, we've already talked about that. That's the employer's quarterly federal tax return. The information you should recall when you were working with that 941. 941. Pull one up here. So the sum of all 4 quarters of these 941s, box 1, This would be all the wages that were paid that were subject to federal income taxes. The sum in box 1 of all the W-2s should equal exactly the sum of box 1 or line 1 on all 4 quarters of the 941. If it doesn't match, the IRS will ask questions. Why are those two numbers have to be the same? Does that make sense? So the W-2, where we have that box 1, the federal income taxes, wages that were subject to federal income tax withholding, the sum of all of those for every employee for the year has to equal the sum of all 4 quarters for the year of the wages that are listed here. So this is one way of checking that and making sure that that is correct. I'm sorry, I said box 1, I meant box 2. This is the number of, that's the number of employees who receive wages in those months. Box 2, wages, tips, and other compensation. And then again, federal income tax withheld from that. Box 2 on all the W-2s added up needs to equal all 4 quarters of what was entered in box or line 2 on the 4 quarters of the 941. Questions about that? Does that make sense? You're all just kind of staring at me. So those W-2s, this PowerPoint. These W-2s, every employee, box 1, added up, has to equal what is on line 3, the sum of all 4 quarters of the 941s on line 2. I'm getting my lines mixed up, okay? So that needs to be the same. Federal income tax withheld, box 2, all of those added up for all employees have to equal the amount on line 3 on the 941 for all 4 quarters. Those two numbers have to match up. That's really the only, and then as you know, because we did this in the last chapter, that amount of taxes that were withheld gets combined with the total number of taxes here, total taxes before adjustments here. So that's how that gets integrated into the 941 form. Back here. Other types of, just real quick going through these. So remember we talked about there were different, let's make this a little bit bigger. View. Let me get this fit to window, that's better. So the 941, remember we had some special 941s, 943 for agricultural employees, which is the same 941, it's just got for a particular sector. There's agricultural. 944, this is for those companies that owe less than $1,000 and then they can pay that at the end of the year. 945 is used for withholding on gambling winnings, pensions, and annuities, those particular types of payments. So again, payroll department's probably not going to be working with the 945 as much. It would be mostly the accounting department if that did apply. So what else? 1099 DIV. This is to report the amounts of dividends and distributions that were paid to shareholders during the year. If the amount is $10 or more, then that 1099 DIV has to be filed. Again, payroll department's really not going to work with that particular form. 1099G, certain government payments, these are usually for unemployment compensation, excuse me, unemployment compensation and state and local refunds. Again, there's a threshold of $10 or more that has to be paid before that triggers requiring having to file that form. 1099 INT, this is for interest income. Again, the threshold is $10 or more that was paid. 1099 miscellaneous is just exactly that. It's for various types of income, mainly rent income, royalty income, commissions, fees, prizes, awards of at least $600 paid to a non-employee. Excuse me, just a minute. Excuse me. And then the 1099 NEC payment, that NEC stands for non-employee compensation. That is for independent contractors. So individuals who are paid non-employees for services, and again, sometimes there might be withholding on these. Usually there isn't withholding, but that 1099 NEC, if an individual receives an NEC, that means they're going to be subject, that income is going to be subject to self-employment tax, because that's for self-employment tax type payments. 1099 PATR, this is for payments, patronage dividends is what they're called. You see these a lot in rural areas. They're for payments from cooperatives, distributive share. A lot of farmers will receive 1099 PATRs. Again,
1099 NECs relatively new.
They are. So 1099 NECs, I think they've been around for maybe 2 or 3 years. Used to be that income was combined, was listed on the 1099 miscellaneous, which is kind of weird, because we're talking about this income is not subject, like right now, all of the income on this 1099 miscellaneous is not subject to self-employment tax. But then they had combined and included in their income that was subject to self-employment tax. So it makes sense that they created a new form to pull that money out, then it makes it more distinguishable from others. Did you have experience with receiving those? And then you get the 1099 NEC and you're like, what's this?
Well, it was more, I was at work the other day and one of the files had a 1099, some guy hadn't filed his taxes for the last 10 years and he had a bunch of miscellaneous and I'd never seen them before, and then I'd ask one of the partners, like, hey, what is this?
Yeah.
Oh, it's before, I think, 2020.
Yeah.
They were all paid on on miscellaneous.
Right.
NECs.
Right, exactly. So you had to pick out, so it's kind of confusing. Like I said, you've got some income that was subject to self-employment tax and some income that wasn't subject to self-employment tax, and so it made it a little bit more difficult to distinguish between the two, but now it has its own form. 1099R, this is for distributions from pensions, annuities, retirement plans. Again, if more than $10 or $10 or more has been paid, then it requires the submission of the 1099R. Now the 1099 NEC, the threshold is different. It's $600 or more. So, and this is for the payor, the person who is the entity that's made the payment. If they paid an individual over the course of the year $599 of non-employee compensation, they're not required to file this form. They can still file it, and that's what I was always recommending to my clients, is just file it. Just go ahead and, then you're not having to make a distinction between the two, but they're not required to if it's under $600. It doesn't mean that it's not taxable though. So the recipient of that money, even if it was $599, if they received it, they're still supposed to report it as taxable income, even though they didn't get a 1099 for it. 5498, this is just an information form that individuals usually get sometime around May of every year, and it shows how much they contributed to an IRA. That information could be relevant if somebody's like rolled over an IRA. Some of it could be taxable, some of it couldn't, but that's usually what that's used for. So it's not really used doesn't have to be used for preparing the tax return. That's why it can be filed a little bit later. And then this Form 8027, this is the annual information return of tip income and allocated tips. So if an establishment is using that allocated tip method, then they would report all of that to the IRS at the end of the year using that Form 8027. So this is just kind of FYI, different types of forms. Now, I am going to pull this up because they didn't mention the 1096, or maybe they did mention the 1096, and I just zoomed past it. I don't see that they mentioned the 1096. So, as I said before, a W-3 form summarizes all of the W-2 forms. The 1099 forms have another summary form called the 1096. And so if you had paid out dividends, 100 different payees received dividends during the year, and you had to file 100 1099 DIV forms, you would have to summarize that on what's called a 1096 form. And then if you also paid interest, you would have a separate 1096 form to summarize all the interest payments that were made during the year. And just like with the W-2s, the W-3 having to be equal to all the W-2s, the 1096 the information on the 1096 has to match with the sum of all the information on the other 1099 forms. Okay, I know the numbers, the acronyms, the letters, I know it can drive you crazy. When you're not familiar with it, the more you work with it, the more familiar you become with these form numbers and all that stuff. But that's what the Form 1096 is. Let's see, what else do we want to talk about? We're not going to talk about that yet. Okay, I guess we went through all of those. Any questions on the different forms that are used? Again, the ones that we're concerned with for payroll purposes, mainly W-2s, W-3s. I've got the definitions listed here, and again, this is under the in-class activities tab. That 941, which you're all familiar with, and then probably the 1099 NEC again would be the one that was most used by payroll, and the 8027. Okie doke. If you don't have any questions about that, let's talk